Now back to Inside Real Estate. Here's Mike the Realtor.
Hey, folks, we are back inside Real Estate. Mike Kruizinga. Time for Mortgage Talk with Terri Waggonner over at Supreme Lending and her website, TerriWaggonner.com. TerriWaggonner.com. Terri, how you doing?
Good morning. I'm good, Mike. How are you?
I'm good. I'm real good.
Good.
So what do we got in mortgage today?
Well, I thought that I would kind of just zero in on a couple of things. We've talked about credit for a couple of weeks and talk about disputed accounts.
Okay.
They're
Very
so
good.
interesting.
Yes, they are.
We talked about last week on pulling your own credit report, making sure that there's no surprises on there at least once a year. You can do that yourself. You don't have to consult me or anyone else in order to do that.
Yeah.
You can also dispute items on your credit report yourself. You don't have to have a credit repair company to do that, although that's typically how it's done. You don't have to.
Right.
But you need to know what happens when you dispute those accounts. Because when you dispute an account, it actually takes that account and removes it from your scoring model. So it will artificially raise your credit score. Well, if you go in and dispute accounts just before applying for a mortgage, then that creates issues for us on our end. If you're doing a conventional loan, depending on what type of account is disputed, if there's a balance, all kinds of information.
Yeah, so we would think, okay, if we dispute something and we get an artificial boost, we would think, okay, that's a good thing. We're gonna dispute it all, and then we're gonna get a good score, so we can get a great loan product, low interest rate. But it's not that easy.
No,
and it's actually counterintuitive, really.
Right. We used to do that.
'Cause it can
by
hurt
the way.
you. Right.
We used
right.
to just dispute everything.
No more.
You can't do that anymore. You can only dispute what's truly not yours and inaccurate information. That's really all you should be disputing is what's truly not yours. If it's yours, you need to take care of it. Or what I sometimes recommend to customers is just leave it alone. Just don't do anything.
Because if it's over a certain amount of time, then
it's not really affecting you too much.
Okay.
So again, I know every week I say this. Call me before you do anything.
Mm-hmm.
Let's look at it. Let's give a few months before you're even anticipating purchasing a home so that we can line out any changes to that credit report that we need to make.
Right.
So disputes, if you've disputed an account, and I've had this on there before, I'm not real sure why they got disputed. Maybe it was an accident, but it's a zero balance and there were never any lates. Well, that dispute's not going to hurt you.
Mm-hmm.
Okay. Because it's not affecting your credit score, and underwriter is going to review that as what it is, probably an inaccurate dispute, and go on with life.
Right.
But if you've got on an FHA loan, let's say, for instance, we're doing an FHA loan, and you have a $1,200 collection account that you disputed. Anything over $1,000, if it's in a disputed collection account, will require us to back you down to a refer or a manual underwrite. And that changes all of our guidelines. So we want to be careful what's disputed and what's not disputed and what needs to be disputed and what doesn't need to be disputed. Had a couple of files this week that we had to get disputes removed. Now, sometimes those can truly impact your credit score. Luckily, this week, God was on our side, and it didn't happen that way. We still remained with the same credit score, but it can affect your credit score if we remove those disputes. Depending on what account it is, how recent it is, what the dollar amount is, all of that information.
Right.
Okay. So an underwriter is really looking at your last 2 years and what's happened there. They're looking further back, but that's what they're focusing in on is the last 2 years. Anytime an underwriter looks at a file, they're looking at the last 2 years, what happened, and what can we anticipate for the next 2 years. So they're going to look back at all of that. So if you've got, let's back up to second on FHA loans. If you've got 2 collection accounts for $500 a piece, that's because they total more than $1,000. It's going to bump you to a refer manual underwrite.
Manual, okay.
Okay. So we need to keep all of that in mind. And what is considered a derogatory credit account? because those are the ones that if they total greater than $1,000. You've got your disputed charge-offs, the disputed collection accounts, and any late payments in the last 24 months. That's a derogatory account. Okay? And then before my time runs out, I wanted to just touch on coming up on September the 24th this week is when our new trended credit report starts. Remember, we talked about that a few months ago.
Right.
And that is where the credit bureau companies are actually doing just that. They are telling the underwriter how you have paid your accounts in detail over the last 24 months. Are you paying just your minimum on those credit cards? They call those folks revolvers. You just keep that balance. You pay your minimum. You keep it maxed out. Those are your revolvers.
Mm-hmm.
And statistics show you have a higher default rate with those accounts. The transactors are the ones who pay off the account every month or are pay more than the minimum. They don't have to pay it off every month. But this information is now going to be available to the underwriter where it hasn't been before. Before, she just could see if you were over 30 days late and how often and when and all of that. But now we're going to truly be able to see how much you've paid, what your remaining balance was every month for the last 24 months.
Yeah, much more detailed now.
Supposedly, it's not going to affect our credit score right now. I mean, a higher balance obviously does affect your credit score, but it's not really affecting it right now. It's not supposed to affect our underwriting, but at some point it has to.
Yeah, you would think it would.
Right.
I mean, if you see somebody's only paying the minimum, but at the end of the day, I mean, they do know the balances, and they knew the balances before as well.
Right.
So, I don't know. It's hard to say how it's going to impact that, but
it's kind of
probably
crazy.
somehow, some way it will.
It's kind of crazy with credit because you have to have credit, but they don't want you to use it.
Right.
So have 1, 2, possibly 3 credit cards. Use them, but pay them off. Don't use them as an installment account.
Yeah, don't carry the huge balances on them. It's just not, it's going to hurt you. And it's important what you said too about the last 2 years of what's been going on with you,
right.
And they're looking for the next 2 years, and obviously it's potential that your loan's going to get sold after your mortgage is underwritten. But if you've had a great credit history, and then all of a sudden in the last 2 years some things have gone south, well, what's going on is going to be based upon the last 2 years, really.
Right.
They're most concerned about it because it's current. What's
going on with you right now?
Yeah.
And extenuating circumstances. We've talked about those before as well. There's always typically when there's just great credit turned to bad credit, there's extenuating circumstances, and an underwriter is going to review those as well.
Right.
So just because you've had extenuating circumstances, that doesn't mean you can't purchase a home. That just means we have to package it a little differently.
Yeah, absolutely.
So
absolutely. Folks, for all of your mortgage needs, look, you always want to give Terri a call. When it comes to just thinking about getting a mortgage, you want to call Terri. We'll go over your credit situation. She can plug you in. She can give you advice on, and this is free advice.
It's free.
That she can help you figure out what to do with some of these things on your credit report. That maybe you have a lack of credit. Maybe you need to build some credit. What helps you build credit and build it quickly?
Right.
What to get rid of on your credit report, what not to. Highly advised. Just call Terri. She'll take care of you. And, of course, not to mention all the products that you have available.
Oh, Supreme Lending has got so
extreme
many.
low interest rates.
Right.
Extremely competitive. You got the jumbo loans, all of those types of things.
Right. So just if you are looking to purchase in the next 6 months or so, give me a call. Let's do a credit analysis so that we can make sure that you're completely ready to go when the time gets here. There's nothing worse than finding that perfect house and then you can't buy it.
Do it.
You can't buy it because the market is what it is right now. You have to be ready to jump on any house that's available, that you've fallen in love with, and you really have to have that credit file completely taken care of.
Yeah, and people really do need to understand that even if you've purchased a home in the past, you need to understand that when you do go looking, you're going to find it probably quicker than you think, and that if you don't have all your ducks in a row, your financing lined up, I don't care if you've got a perfect credit score, money in the bank. I mean, unless you're planning to use that cash to pay for the house, then it doesn't matter. You know,
Right.
you're wasting your time and you're wasting, the seller's time and even viewing the house if you don't have your ducks in a row ready to pull the trigger on something.
Right.
Because guess what? There's going to be multiple offers. Your offer is going to get thrown in the trash because it doesn't have pre-approval letter with it. So be ready to go. Call Terri. Go to terriwaggoner.com. You can catch up with her, and you can fill out an application online. And then, of course, just connect with her. And she's one of the best, and she's going to actually just talk to you and go through everything, and you're going to enjoy it, folks.
I had someone one time tell me that I should write a book on mortgage lending for dummies. and I took that as a compliment because that means that I can explain it to you where it makes sense to you. It's
Right.
something that I do every day because as mortgage professionals, we have acronyms coming out the ears that people just don't understand what we're talking about.
Right.
So I promise I'll speak the English language to you.
That's right. Absolutely. All right, folks, another good segment of Mortgage Talk. We're going to be right back. See you in a few.